Good morning. It's Thursday, the 27th of October, 2016. Apologies for not having uploaded any videos recently. I've made a few, but the reason being Monday I woke up about 5:30, set my computer up, and I got the blue screen of death. So I've spent Tuesday and Wednesday, or all day Monday, some of Tuesday, getting back to some sort of normality. You can imagine what it's like when you know what it's like when you lose a hard drive or a laptop or a machine. And the first thing, couldn't boot or anything. First thing I thought was hard drive, all up-to-date information. Must strip the machine out and see whether I can recover the hard drive. So that was all of Monday. Managed to get a couple of little trades in because I was staring at the charts whilst I was trying to sort of read the hard drive and copy stuff off of it. So, but no time to make videos and uploads and stuff like that. So today, pulled up the charts. Lovely looking little trade here. You'll notice, well, we're on a different machine, so it sounds different and looks different. And one thing that I found on this old machine of mine was this other little indicator was already on an old template. So I thought, yeah, that's something that I always want to be aware of, whether I'm above yesterday's high or below yesterday's low, in order to consider which way is the likely direction of the price on that particular day. It's something I usually draw on, but this is automated, so it just picks the high of the previous day's candle and the low of the previous day's candle and prints it on the chart for you. So a little bit lazy, so I might take it off, I might leave it on, I'm not sure yet, but that's why it's here today. So an obvious thing from an initial squint at the charts is with this pound yen is that it's clearly trading quite reliably between this range here. So we're currently at the peak of the range, and one thing that we know about price is that it does repeatedly do quite often the same thing. So why would we want to be going north when in the last 3 times it's touched that area up here, or 4 times, or even 5 times if you can count that one, it tends to collapse? And likewise, why would we want to go south or trade short whenever it touches this area? It tends to find buyers. So with that in mind, I started my analysis on the H1 chart. Well, H1 told me clearly that I was alerted to take a down trade. So all I can do is at just prior to 6 AM we had this candle had printed, and we had at that time a lower high, and we'd got the start of a lower low. Well, on the M30 this was, in fact. We'd this candle here hadn't broken the high of that one, so we were in fact looking at a potential resumption of the short direction. So I'll put a note on the chart. Firstly, I'll put a low on the candle of this, a support level on the candle of this, and said, right, if it breaks below here on the M30, it will print a new contra M30 alert, and I will be waiting for something like a 5-minute pullback. So it would come something like that, and then I'm waiting for a 5-minute alert to the downside to counteract, well, 30-minute first and then drop to the 5-minute, and so on and so forth. So that's my plan, was to go short. Now the opposite plan was, as a result of this M30, was to wait for a 5-minute pullback and then a potential 5-minute long. So, but bearing in mind at that stage we had another 30. Well, what in fact happened at this stage is that if you go down to the 5-minute, let's remind ourselves that this is the alert of the morning, this here. So what are we waiting for as a result of the alert on the 30 to the long side? Well, a pullback. We can clearly see we had this pullback here. Now, not technically 100% correct, because as I said before, once you get the 30 up, you want the pullback after the 30-minute candle is closed. But what often happens, and this is sort of anecdotal and as a result of my analysis or screen time, should I say, that at between 6 a.m. and 7 a.m. the price tends to just sort of follow the trend of that period, which in this case the 5-minute trend: low, high, higher, low, higher, high, uh, and as you can see, it pushes up. Now, you'll only be able to, well, I've given you a heads up on that. All you can do is study that for yourself. So technically I broke my own rules here, but rules are there to be amended according to time of day and so on and so forth. We've got news relating to the pound at 9:30 today, so I expected some sort of strange movement, sideways movement, call it what you like. So what do we got above us for a potential long? Well, the 25 level here, which is 12775. We've got some support over here that should be tested as resistance, so that was a good heads up for me. And you can see, and I have mentioned in previous videos, if you're ever going to go for support as resistance, always just cut it slightly less, and here we go again. Once again, it's missed it by about a pip, if you can see that on your charts. Don't know why that is. It might be the bid offer spread or something. It's more than likely the algorithm's trading this now, because as this very successful professional trader once said on a webinar, the big boys come in, flick off the algorithm switch, or they override the algorithms for whatever reason, you could call it that, by the amount of trading in the market. It's a thicker market, if you like, more's going on, and then the minute the algorithms realise that there's either a thinner market out there, then they can just chug along. Whether it's that or not, I don't know. He said it might be. We'll never know these things. It's like sort of black art. But you have to, that comes with experience. So let's drag my trade onto here and show you exactly what I did. So once we got that alert to the long side, I wanted to be looking to go long. So as you can see, I've taken my trade after that 5-minute chart, after that 5-minute alert there. What in fact I did was I wanted to wait for that little 5-minute candle to break there with the 1-minute chart. So we dropped down to the 1 minute. The high of that candle there was that M5 high, and we've broken through it, and as you can see, I've entered on the next candle. So and I've just taken my 7 pips, and call it what you like, 7 or 8 pips, but call it what you like. It's either what came first, my choice of 7 or 8 pips, or the fact that the price changed direction at that level. I mean, it's just crazy. You would have sat in what's this, about 15 minutes of minor stress for the sake of a couple of pips, when you can be at the move of the move of the moment has been that 7 or 8 pips. I think it went for 8 because it's pound yen. That could easily have just shot up further, but you get a feel for these things. So all I'm trying to do here is lay out a template, if you like, a plan, and show you how I plan my trades in the morning, and you watch these videos, find your own crossover alert when I get time, which isn't around a lot because I've got a lot going on in my life at the minute. I will try and upload stuff myself to some sort of web page or or blog or something, with all the different indicators that I can spare. Some of them are proprietary, they're paid for, and so I can't give them out for free. Well, I can't give them out for any reason. I'm not going to sell someone else's software. So you have to make do with your own bits and pieces. But just a moving average crossover is easy enough to find, and then you just set it up for the 3 crossing the 10. That would give you the arrows in exactly the same place as mine. and then the chart grid lines, that's called chart grid lines if you want to Google that, and that will give you horizontals on there. This one's a proprietary, the daily high and low is proprietary, but I'm sure you'll be able to find that by just searching around on the internet, and then that's free for anyone to have. This is free, that's P to E, average daily range. If you want that, that's clock version 2 I think, and this is magnified price. So everything's there for free to set up your charts exactly like mine. Then if you find this interesting, come back and watch the videos as and when, and watch them time and time again. This is what I used to do to learn this stuff. So thank you for watching again. Another successful trade, another relatively easy trade. Oh, and just one last thing. So I'm still biased to the short side for this particular setup. Let's clean up that chart again, and I'm now waiting for a new alert to come into a line. What probably happen is we get an H1 alert to the long side here, so we categorically really need an H1 alert to the short side to consider trading short, something like that, with a few bits and pieces in between, no doubt. So m30 is definitely alerted to the long side, so that categorically needs alerting to the short side, and this is the sort of thing I put on my charts. Need m30 short. I could put alert, but I know what it means if I don't. And then I'll put that on 4 or 5 charts, and as I flick through them I can just see what's going on, and that's it. So I'm hoping for shorts. This is going to be affected by the 9:30 news, so this is why these are so good, because it's just a mechanical system. Never trade against the rules, never trade against the alerts, and hopefully you can build yourself a very solid, reasonably stress-free method of trading. If you what you can do with this also, which is important, if you get a mistake, or if you think you've dotted every I and crossed every T, and you can often unwind your trade, go back over it, from the higher time frame down to the lower, and you'll probably find that you forgot to check a time frame between a time frame, so you may well have taken the trade based on an M30 down, an M5 up, then an M5 down, and when you check the M15 you'll see that you traded against an M15, and consequently the price just pulled back and then shot away against you. So it's important to study the losses as it is to learn and study the wins. Thanks for watching. See you again.